Assalamualaikum and hello everyone. Today, we will present our independent review regarding the proposed reappointment of the external auditor of Renewable Berhad for the financial year ending 2025. This review was commissioned by the Audit Oversight Board to assess Renewable Berhad's auditor reappointment. It was triggered by Reneco's PN17 classification on 8 February 2024, following market rumors and public scrutiny. The company faces cash flow problems and delay reports. Using MIA bylaws and IESBA code, we assess four traits, which is familiarity, self-interest, intimidation, and self-review. Administrative pressure and debt restructure create ethical conflict. Therefore, we recommend the AOB appoint new independent audit firm for the next fiscal year. Renewable Berhad is a public listed company in renewable energy, logistics, and property development. On 8 February 2024, it was designated PN17 due to cash flow and liquidity problems. Stakeholders fear that pressure to resolve its PN17 status may compromise auditor independence. The Audit Oversight Board, established under the Securities Commission Act 1993, commissioned this review. Our four objectives are: identify independence threat, analyze impact on audit quality, assess existing safeguards, and recommend to the AOB.
Greetings. So I'll be talking about the assessment of independence risk. For familiarity threat, when evaluating marketplace rumors regarding auditor independence, the Audit Oversight Board needs to examine the total accumulated tenure of both the auditing firm and the engagement partner. The objective is to assess whether an extended relationship has created a familiarity threat. If left unchecked over successive financial periods, non-rotation could compromise objectivity, creating a risk where auditors fail to identify critical reporting problems, particularly within complex business segments like Reneco's EPCC contracts. Next, for the self-interest rate, Renewable Berhad is currently dealing with severe cash flow constraints and limited access to credit. In this high-pressure environment, two major risks emerge. First, the company might fall behind on paying its audit fees. If the auditors are owed significant amounts, they might lose their objectivity out of fear of not getting paid. Second, management could pressure the auditors, implying that any negative review of their corporate recovery plan could drive the business into complete failure. This makes it incredibly difficult for the auditors to remain strictly objective. For intimidation threat, looking at Reneco's internal structure, the company is under the strong managerial influence of its executive chairman, and the group CEO position is currently vacant. This means the standard system of corporate checks and balances isn't there. This environment creates an intimidation threat for the external auditors. If they try to closely challenge or audit high-stakes financial areas like asset write-downs or recovery plans under their PN17 status, they face the realistic pressure of being fired or replaced at the next annual general meeting. Moving on to next, while Reneco's report highlights that they have an independent board structure to oversee overlapping responsibilities, the EOB still needs to dig deeper. They must check if the auditors provided extra, non-audit services during this stressful financial transition. If they did, it creates a serious self-review threat. Simply put, an audit firm cannot objectively audit financial numbers that they themselves may have prepared or advised on. Lastly, after being classified as a PN17 distressed company, Renewable Berhad is facing massive cash flow constraints and a drop in market confidence. Because of this, management is under immense pressure to push through a corporate recovery plan to rescue the business. This environment creates an advocacy threat for the external auditors. The risk here is that the auditors might subconsciously cross the line from being independent critics to becoming supporters of the company's survival. As a result, they might overlook flawed data and validate overly optimistic projections or asset valuation just to help the company maintain compliance and stay afloat.
Next, I will discuss the impact on audit quality in Renewable Berhad. When auditors work with the same client for a long period, they may become less critical when reviewing management decisions and financial information. This is important because Renewable Berhad is involved in complex EPCC projects that require high judgment in areas such as revenue recognition and project costing. In addition, the company's PN17 status creates financial pressure which may influence auditor judgment when assessing issues such as impairment and going concern assumption. The vacant CEO position may also weaken governance and reduce effective monitoring within the company. Overall, these situations may reduce stakeholder confidence in the reliability of the audited financial statements. To reduce this risk, Renewable Berhad has implemented several safeguards. Firstly, the Independent Audit Committee helps monitor the independence of external auditors and reviews the company's financial reporting process. This helps ensure that auditors remain objective during the audit engagement. Secondly, board governance oversight helps supervise the company's risk management and internal control systems. This strengthens accountability and reduces the risk of financial misstatements. Besides that, the company also applies ethical policies and whistleblowing mechanisms to encourage transparency and proper reporting practices. From the auditor's perspective, compliance with professional standards helps maintain integrity, objectivity, and professional skepticism throughout the audit process. And lastly, audit partner rotation may help reduce familiarity threats and improve audit effectiveness.
Assalamualaikum and hi, my name is A25213. My metric number is 307169. Based on our analysis, Reneko Berhad face significant auditor independence risk because the company is currently under PN17 financial distress. The main three identified are familiarity, self-interest, intimidation, and self-review traits. The long-term relationship between the company and its auditor may reduce professional skepticism, while financial difficulty may create pressure regarding audit fees and client retention. This trait may reduce audit quality and weaken stakeholder confidence in the company financial reporting. Although some safeguards already exist, concern about, therefore, we recommend that the Audit Oversight Board reconsider the appointment of the current audit firm and implement auditor retention to provide a fresh and independent perspective. The company also should conduct an independent quality review, strengthen audit committee oversight, and closely monitor non-audit service to reduce potential conflict of interest. In conclusion, stronger auditor independence safeguards are essential to ensure better audit quality, transparency, and stakeholder confidence in Reneko Berhad financial reporting.